So this is a US pharma company, which, oddly for the pharma company, is 140 years old. Its main drugs consist of a range of very difficult to pronounce brands, but they specialise in immunology, cancer, and pain. You'll be pleased to know, Paul, it currently trades at 44 times forward earnings, has a market cap of about 340 billion.
Taking away pain.
That's up to your lawyer. So anyway, has a market cap of 340 billion. In the last 5 years, the stock is a triple. It's up 312%. So off that, you have every right to tell me to get lost, but I'm going to tell you that I think this could be severely undervalued. So, set the scene. Obesity is a huge issue in the US. In the last 5 years, the rate of obesity in America has actually risen from 30% to an incredible 42%. America's getting fatter, and this company has a drug for it. A drug that's so impressive, it's been whistle-stopped through the FDA's breakthrough and fast-track drug schemes, and could be approved as early as this year, after only receiving designation in October 2022. So it's a once-weekly drug. It is already shown to help patients lose 22.5% of their weight in company studies over a 72-week period. Got some bad news for you. I'll tell you straight up. Insurance in the US doesn't cover obesity on its own, which, is a bit of a bummer. But I would argue, no, obesity is linked to a number of other problems. So let's say diabetes, liver failure, heart failure, kidney disease, sleep apnea, and other issues caused by visceral fat. And all of those that I've just listed are covered by insurance, and this company knows that. So they're actually trialling it and co-trialling it with a lot of those products. They want it to be used with everything. And that's because the benefits are significant. The drug has shown in non-diabetic patients to reduce blood sugar as if they were on a blood pressure, as if they were on a heart rate med. Their lipids fall as if they were on a statin. Their blood sugar levels fall as if they were on diabetic medicine. This is potentially a wonder drug. So I pulled out some information. Bank of America, the topical pharma division, have ran the data on this. And actually on the data that they're presenting, I think they're being wildly conservative. So I looked through the sort of limitations of the study, and they're betting that if this drug only achieves a 10% market share in the US alone, on only the illnesses I listed earlier, that this drug will bring in $100 billion a year in revenue. And on a standard pharma margin, that's an incredible $40 billion on the bottom line, just from that tiny subsect of society there. So for the company, that would be a 6x in earnings, a 7x in revenue, which makes all of those expensive metrics I read out at the beginning suddenly look cheap. So look, I hear you, pie in the sky maths. A wonder drug might be really difficult for you to swallow. But I'm giving you Eli Lilly here, a company with pedigree, a company that brought insulin to the market, a company that found the polio vaccine, made Prozac to help people who struggle with depression, and Cialis, a drug that helps your penis work better. And Paul, it's got a 1.25% dividend.
Eli Lilly is always one of those ones, isn't it? It's just out of touch. I was trying to guess the drug that you were talking about because I did read about it a couple of months ago. It's not liraglutide, is it? Or is that like a totally different?
Something like that.
Also
yeah.
goes.
I'm not even going to. Yeah, I'm not even.
it's
not even going to attempt to pronounce it.
Yeah, it's either liraglutide or like. No, it's like that's got different trade names like Victoza and things like that. I did think you were talking about Pfizer at first, but I wasn't sure. Eli Lilly, I don't know a lot about, I must admit. It's one of those ones which I never really looked into. So, mainly because I think the valuation is always stupidly high, right?
That's what happens when you triple in 3 years. They've probably had no right to really do that. But they're tripling because potentially they have a wonder drug here, and they have the pedigree to have brought wonder drugs like this to the market before. I mean, insulin, the polio vaccine, and Prozac and Cialis were all huge drugs, and this one has an even more common issue that it's looking to solve. So it could be a monster. It could be nothing. We talk about Biogen a few times on here as well. They also have a drug for Alzheimer's that is probably equally as unlikely to get approved as Biogen's is, but again, another sort of similar kind of drug. It's trying to attack the plaque on the brain, which I think is they think is the main cause of Alzheimer's. Whether or not we're not entirely sure at the moment, but I think it could potentially be a very exciting stock if you wanted a little bit of risk in your portfolio, a bit of pharma risk. I would avoid the little biotechs that any of them could kick off. I think this has some real interesting risk.
Well, it trades like a Cathy Wood stock as well, because it's 46 times earnings at the moment. So Cathy Wood must be looking at that going, oh, yeah, that seems like a reasonable valuation.
I was going to say, look at that chart, though. Have you ever seen a chart on a big cap like that in this kind of environment that just continues going up and to the right with almost literally no volatility?
It's like it goes 2008, boom, straight up, no problems at all. But its earnings do that as well, and that's what you have to remember. The revenue does that. If you could put the lines straight next to each other and just add, it's incredible. It is an incredible company, and how it's grown over the past few years, and it's set to continue growing by the looks of things as well. But wow, just that valuation, right? Valuation is a tough one here, and I think we have to learn from the last 2 years.
Valuation is tough where it currently is. I mean, it's always a feature of these things, and Steve is dead right to point this out, that with big cap pharma stuff, Eli Lilly has a market cap of about 338 billion from what I can see of it. It's difficult to move the needle significantly when you have a market cap that size. So how are you going to grow your earnings sort of 10%? You're going to have to add something quite significant on there. But this could be that, right? I mean, he talked about 40 billion on the bottom line. That immediately takes us to a PE of under 10, which is about right. And that's kind of by itself pretty much here. So there's kind of a good deal of optimism coming through on this sort of thing. I was actually more positive about the Alzheimer drug than Steve was. The last thing I heard about it was back in November. They had some pretty positive looking trial data, and I'm not qualified to evaluate the likelihood of these things. I'm not particularly qualified to judge the efficacy of trial results, but the only bear point I have on this, and you might take this as quite a loose bear point, I think it's quite devastating, to be honest, is that I know Kramer is quite fond of this. And he thinks that this is a significantly better organisation than Biogen, and he thinks that their Alzheimer's drug is the real deal. Now, what Kramer knows about Alzheimer's drugs, I suspect you could write on the top of his head. But it does kind of strike me that there might be room for kind of optimism here where there perhaps wasn't, and I wouldn't let... I'm sort of torn between not wanting to get fooled twice on Alzheimer drugs, like with the Biogen thing, and also not wanting to suddenly think, well, look, I know how Alzheimer drugs work because I've seen one example of these sorts of things. So I think that I can see what Steve's getting at here with some decent sort of upside. Cathy Wood, by the way, has no interest in this stock at all on the grounds that it has earnings.
The other thing I was going to say is that there is also a competitor as well. So there is another risk. There is Novo Nordisk. They also have a similar drug, but has proven in
Similar
the early
valuation.
studies to be... Yes, similar valuation, but their drug is not as effective. I think on their patients are around the 17 to 18% mark, and why would you want to lose 17 to 18 when you can lose 22.5? I think that's definitely that's definitely more beneficial to me, at least.
I think they're also an insulin bunch, aren't they, Novo Nordisk? I mean, when you were describing the company at the beginning, you did say it was a US listed. Yeah, you said it was a US listed stock, and I knew it was Eli Lilly, by the way, because you told me before. But I would have been at first torn between those two, thinking insulin and an obesity drug. So I think Novo Nordisk has kind of both of those things, and I would have got there based on you said US rather than Danish, basically, which is what Novo Nordisk is, I think. So I was kind of wondering in that situation, the kind of rub on Novo Nordisk is that people refuse to I think there's doubts over whether that can be used to just say, here you are, you're obese, take this drug versus we can use this to kind of combat side effects of other things that involve weight gain was the last I heard about this. This is quite a while back now, though.
Tirzepatide is the drug. It is a
Catchy.
It is a it's a derivative of dulaglutide and liraglutide, which are the two other types.
Oh right, yeah.
Saxenda,
Of course.
Liraglutide is Novo Nordisk's version of it. So they follow the same principle, but it's I have seen these two on the market in the local area. What's the binary? I know you've touched on it already, but what's the binary risk here? Particularly with the Alzheimer's drug as well. You've talked about that, but what happens if this drug? Everyone's obviously pricing this in here to be a massive earner for Eli Lilly, but what if it doesn't get okayed for reducing heart disease for whatever reason because it doesn't do it directly, or it doesn't get it for reducing blood pressure? What happens? The stock collapses basically, right?
There's a very real risk that the side effects become more problematic than the causes that the drug is solving. So I think in that case, if that was to happen, I would say Eli Lilly is very likely a cut in half. That would probably bring it to about 20 odd times earnings, which it still has a fairly promising pipeline outside of this. I was obviously disregarding all of it because we've got essentially $100 billion drug here potentially, which is about 3 times what the next best-selling drug has ever achieved. So this is the sexy part of it. But Eli Lilly still has a pipeline to maintain a normal valuation. It's just that at the moment it's not trading at a normal valuation because potentially it has a wonder drug, and I think they've not baked in the full amount of that, nowhere near the full amount of that price.
No,
I think they've got 25% of that wonder drug coming in, but I don't think that actually represents that there's a 25% chance of this actually going ahead. So I'm leaning towards that this goes through. I wonder about the $100 billion a year. That's a lot of money, but it could happen. It could definitely happen. And like I say, I wonder. When insulin was brought to the market, that was a wonder drug back in its time, and I wonder if we ever thought it would be as big as it is today. So it could happen.
It's the risk. The risk. We've always got to go back to risk, haven't we? Are we a little bit late to this party here at this 46 times earnings, and now you're taking on more of the risk based on the outcome of these drugs trials and the FDA okaying it. If you got it into it a little bit earlier when it came out, you could take less risk, and even further back, to 2008 when you didn't even know the drug was coming onto the market. That's when you're taking the least risk. So here for me, I think it is risk, and this is at these valuations particularly risk on. I don't think it's a risk in the sense that Eli Lilly's going bust anytime soon. It's just that if it doesn't go well, you're putting yourself at risk of underperforming here based on outcomes, and unfortunately that's how pharmaceutical stocks work, right?
It is a little bit. I mean, you made the point, Paul, that there's kind of risk and there's risk with these things. So compare that with something like a stock called Avacta, which is, from what I can see of it, the kind of latest story stock that we've been systematically ignoring on this show because we tend to be a bit further detached from kind of meme stocks than most kind of, I suppose, more on point podcasts. But this is a company that has a potential cancer drug going on here. I think it's in about phase 1 trials or something, so it's very, very early on this, but people have been going absolutely mad on it, and it's up sort of 98% over the last 5 years, 50% over the last year or so. It's really been flying here. But aside from its cancer drug, or its candidate cancer drug, I guess I should call it, it really got nothing. At least with Eli Lilly, as you were saying, staying away from the kind of very small biotechs. Look, there's huge upside on a big cancer drug in a phase 1 trial if it hits, right? But there's a much, much greater risk than there is with something like an Eli Lilly, which has a lot of resources. I feel like their kind of breakthrough drug will come. The question is kind of when and which, not whether, I suppose.
So look, I ran the maths on
Deal,
this.
no. I was going to say, what's the outcome rate of a stage 1 trial?
Oh, very, very low. Yeah, very low. They almost all
Yeah.
fail. 99.99% of them fail. Just going back to Eli Lilly valuation, I did run some maths on it at work today, and I think if the drug fails, I think there's a 50% haircut essentially coming to Eli Lilly. But if the drug actually comes through, I think there's actually a 300% upside over 10 years,
Wow.
which is what the drug would take to come out. Because I think essentially, if you add that 100 billion on in 10 years, you're looking at about P of 7. I think a drug of that kind of size, with the company 10 that amount of profit would attract a PE of about 21. So it's crude, but I think that's kind of what it would be. The other thing is as well is that drug opens up a realm of possibilities for Eli Lilly, because they become a very, very large company at that point with a very, very large amount of cash flow. They could almost go out and buy any other pharma stock they want at that point. So the risk...
Vactor.
Exactly, yeah, Vactor. The risk is it's one of those stocks where it could go either way. It's probably a fun stock for us all to sit on the sidelines and watch, and then come back to this show in 10 years' time and go, bollocks.
Should have bought it. No, I like to use these. I love to use these ones which are a little bit too at risk to sit back, watch. Tesla, great example. Oh my God, how good is that to predict that 2 years ago and go, that is overvalued, that's going to come down. It's great to watch, great to learn from, and I'm lucky that I'm not involved in it. And I can take that forward now, and I can be Chuck Carnival in 50 years and go, look, they said I was an idiot for not buying Tesla, and look what happened to it. It's going to happen again in 10 years, and it happened again in 20 years. I think Eli Lilly here would be a really good opportunity to learn here. And I think these stocks that are entering these like high PE ratios due to great pipeline and things like that, we can sit back and we can, it's probably more valuable to you to learn from this rather than actually be in the stock and, FOMO into it just because of these drugs. And I like that. I like that narrative here in the market. And I think it shows discipline, and I think it shows poise. And I think some of these stocks we can learn from.